China is on the brink of a monumental economic collapse that will surpass the suffering the 1929 Great Depression brought in the U.S. China's present economic situation is ignited by a convergence of elements, some deeply rooted in the nation's past policies and economic strategies, while others emerge from recent global and domestic shifts. Key elements contributing to China's economic challenges include demographic decline, a crucial issue being China's swiftly aging population, and decreasing birth rate. The consequences of the long-standing one-child policy, only eased in recent times, are now evident in a diminishing workforce. This demographic change presents a considerable hurdle to an economy that heavily relies on an extensive youthful labor force. Real estate and debt crisis. The real estate industry, once a foundation of China's economic growth, is now a vulnerability. The excessive dependence on property investment and the resultant debt crisis have led to a precarious situation where consumer confidence is diminishing, impacting broader economic stability. Shifting consumption patterns. The typical Chinese consumer, traditionally a saver, is currently contending with economic uncertainties, leading to decreased spending and a cautious attitude toward investment. This alteration has far-reaching consequences for domestic demand and economic robustness. Slowing GDP growth. The era of double-digit GDP expansion seems to have ended, with China confronting a significant deceleration. The slowdown is partly a natural shift from a rapidly developing economy to a more mature, slower-growing one. However, it also reflects more profound structural concerns within the economy. Global trade and diplomatic tensions. Rising trade tensions, notably with the United States, and a shifting global economic order, present supplementary challenges. These tensions affect China's export-oriented sectors and potentially restrict access to crucial global markets and technologies. Environmental concerns. China's swift industrialization has incurred a significant environmental toll. Tackling these environmental challenges necessitates substantial resources and may impact economic activities, particularly in heavily polluting industries. Technological and innovation drive. Although China has made notable advancements in technology and innovation, sustaining this momentum amid global competition and internal challenges remains a critical task. Internal policy shifts. The Chinese government's strategy in handling these challenges, including stringent regulatory actions in various sectors and the emphasis on common prosperity, will substantially impact the country's economic direction. The Chinese economy is displaying signs of strain evident in various sectors. In Zhao's assessment, there is a discernible downturn, and many urban regions feature unfinished apartment complexes. A crucial indicator is a sharp upsurge in unemployment among young adults aged 16 to 24, which more than doubled from roughly 10% in 2018 to over 20% recently, resulting in the cessation of official unemployment data publication. China is undergoing a demographic crisis due to the high expenses associated with raising children and decades of strict family planning policies. In 2022, the population decreased for the first time in 61 years, and this trend continues, intensifying the strain on labor and pension systems. The stock market in China has also sustained a substantial blow, dropping around 40% of its value since 2021. In the real estate sector, there's been a noticeable decline, with land sales in 2023 plummeting to their lowest levels this century. Some developers have resorted to extreme tactics, such as offering gold bars, to entice buyers. Moreover, consumer spending has declined, and the country is grappling with deflation. For the first time in numerous years, China's population is dwindling, casting doubt on whether its economy will ever surpass that of the United States. This challenges the long-standing belief in the unavoidable ascendance of the East over the West. Despite these obstacles, China's resilience has been evident in previous crises. During the 2008 financial crisis, when the United States, its primary trading partner, was severely affected, China swiftly rebounded. Similarly, during the COVID-19 pandemic, despite initial disruptions, China was among the first to recover, experiencing a substantial surge in exports. China's approach to economic challenges often involves extensive infrastructure projects, such as roads, bridges, and buildings. This is enabled by favorable borrowing conditions and subsidies for state-owned enterprises. While much of this construction might be unproductive, it stimulates employment and GDP. The tactic was more justifiable when China,